Hey, welcome to the show. Be the boss of your money. Yeah, it's about control, knowing what's going on in the world, especially in the world of finance. And we're going to talk about the market now because this is such a day that is back to where we were about a week ago. Uh, if you recall, a couple of weeks, about 2 or 3 weeks back, we started getting this rip roaring rally in other, meaning small cap, mid cap, industrial, stocks other than technology, especially large cap tech, where the large cap techs, you know who I'm talking about, the FANG stocks, the Mag 7 stocks, the Meta, the Alphabet. If you don't know yet, Meta is Facebook and Alphabet is Google. It's not just those super large cap stocks, Nvidia, for example. Other, big hot performers are getting clocked as well. But basically, the Mag 7 is becoming a source of funds for reinvestment into other areas of the market that investors consider to be either cheap or a bargain or that are more timely. Large cap tech stocks, are they're it's the earnings are cooling a little bit. Uh, Artificial intelligence hype is probably not probably has gotten weight of itself. We've been talking about this on this show for a long time. I've been saying this is crazy how much these stocks have gone up. Um, the trillions of dollars of stock market wealth that have been created on the back of AI hype is probably worth more than the actual artificial intelligence opportunity. That's how much these have gone up. And it's going to take a long time for the artificial intelligence technology, software, hardware complex to actually grow into the stock market valuations. This is exactly what happened in 2000. It looks eerily similar. Maybe it won't be as bad as what happened in 2000. That's when the Nasdaq went down 80%, but it could be bad. Listen, a 25-30% pullback in the Nasdaq or S&P 500, that would be a pretty punishing retreat. By the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. All right, so I'm going to show you exactly what I mean. I'm going to roll a quick intro, and yeah, I love doing the intro like 3 minutes into the show. But stick around. I'm going to show you the major averages: the Dow, the S&P, the Nasdaq, and the Russell 2000, and you're going to see we're right back to where we were 2 weeks ago, and that trade is still pretty powerful and still alive. Here we go. All right, I'm back. Thank you. I was just over here checking the air conditioning unit, the AC in our office. I don't know. The last few weeks has been a little weak, and so it's more than just hot weather outside. That's my thing, though. Just that's why I was over there. I'm just telling you, I was moving over there. Where was I? What the heck was I talking about? Oh yeah, large cap tech stocks in the market. Let me just show you my screen real quick here. Okay, this is this is my source of financial news, my one of my main sources right here. Look at this. The Dow is up 81. The Russell 2000 was up 27 points. That's over 1% gain. Earlier today, the two red ones, the S&P and the Nasdaq, were up really nice today. They were up solidly. The Dow was up a couple hundred points earlier today. It all came out at the end. It was just a little bit of a bounce, and investors are still looking to sell the big winners and move money into other assets. So the S&P is like just so loaded with tech stocks. It's basically a proxy for the large cap tech stocks. And the Nasdaq is even more so. But these are not really, in my opinion, the S&P is not a diversified index. But people say to me now, "Oh no, I'm not worried about the stock market. I'm diversified. I'm in the S&P 500." You're basically in a tech fund, right? I mean, it just I people don't really know what they're investing in, but I think some of the fund companies, in particular Vanguard, have done a bit of a disservice to investors by always touting the S&P 500 index. Well, you just have to invest in the S&P, S&P. And it's gotten to the point where it's so tech heavy that I don't think people realize the amount of risk that is built into it. And now that the large cap tech stocks are going down, you're seeing money rotate out. And the same thing goes for the NASDAQ, but in an even more intense way, uh, more magnified way. You see money going into the Dow and you see money going into small caps. So that is the continuing rotation. And if we take a look at the watch list here, okay? I have a pretty extensive watch list. And if you want to know about my watch list, what stocks I watch and why, you're always welcome to ask me about that. Maybe I'll talk about that one of these days. I'm also going to cover next week how should you invest in small caps and mid cap stocks and emerging markets and other things, like what exchange traded funds could you use for that stuff, and what are the options or the tools available to you, and the expense ratios of these funds. We'll get into that for the ETFs, I guess, next week. Okay, but RTX, the old Raytheon Technologies, up a lot. Defense contractor Northrop Grumman. Lockheed Martin had a huge update the other day with a great blowout earnings. Even Southwest Airlines is up today, which has been doing terrible. But look at all the green on the screen. Okay, American Airlines is up. Not a great report, but they were still up. Even Boeing. Like, there's just so much money now going into industrials. Now, granted, GE earlier this week was down like $10 in one day, but it's making it back pretty quick. Lockheed Martin up another 6. I had that Lockheed Martin for a client recently at like around 400. He's like, I don't know, Mitch. It's not doing anything. It's just stuck at 400. I want to sell it and put it into NVIDIA. And people do that. And this is a guy that I think was smarter than that when I tried to explain you can't just have all tech stocks. But luckily, I convinced him to hold on to some of it. And what little he wanted to take out, if he wanted to sell the whole thing, I just put some of that money into small cap and mid cap. I told him flat out, listen, I'm talking to people about taking profits in these large cap tech stocks, and you coming to me wanting my opinion on if you should buy more. And obviously my opinion is no. If I'm not talking one thing on one side of my mouth and another thing out of the other side of my mouth, I just want you to be careful. I say that investing is a lot like golf. Are you a golfer? Sometimes doing well as an investor. Okay, let me think of this there. Investing is a lot like golf, meaning that sometimes as an investor, you do better over the long term by avoiding mistakes like golf. Like, to me, a good round of golf is because I avoided mistakes, not because I hit a heroic drive, on a par five, 560-yard, hole. Okay. So to me, doing well in investing is not about going for the moonshot every time. It's about potentially minimizing mistakes. And you do that with diversification and having other kinds of stocks. I always say to people, I always say to you right here, if all of your investments are doing well at the same time, you're not properly diversified. And this is a stark example today of how large cap, mid cap, emerging market, utilities, industrials, they're doing quite well. What's getting killed is tech, consumer discretion are just getting absolutely mauled. And, but when the stocks are going up and you're making money like every day on a particular small group of stocks, it's hard for people to walk away from it, which is what I do as a third party, so to speak, third party consultant to my clients. I could take them out of certain stocks when I think the time is right for them. For them is the operative words. Okay, so really good day for tech, but let's take a look at. I know. When I scroll like that, I'm gonna make you nauseous. But let's take a look at the Fangaroos. Okay, or as the Mag 7. These stocks are all at recent all-time highs, but you see the red. The red is how much money investors have lost in just since mid June. Okay. and they're coming down quite a bit. Now, some more than others. I look at it like this. Netflix, instead of saying $697 a share, let's say $69 to $63. That's a hit. It's almost 10%. Okay, but that happens. Not the end of the world. Amazon, it gets bigger, but look at Meta, 54 to 45. That's it's getting up there. Nvidia, 140 to 112. That is a hit and a half. That one's starting to work because Nvidia split at 1200. So the post split price, and I said this to you like 2.5, 3 weeks ago, right in the show, the post split price on Nvidia was 120 or 1200. They did 10 for 1 split. So 1200 divided by 10 is 120. All right. And here we are at 112. It broke that. And then after it split at 120, it went to 140. And once it broke about 3 weeks ago, that 120 level, I said, this is it. I think is going to be a negative for the stock. Didn't hold that split. And that's what attracted a lot of people into it. And now they're wondering, like, why did I do this again and buy into the hype again? And now that it's below 120 and selling is accelerating, it was even lower earlier in the day. Uh, I think this is, what can I tell you? There's no guarantees here. Just right now, it looks like a pretty big negative and an overhang in the stock. Maybe that'll change tomorrow. But my experience tells me that these stocks continue to be a source of funds for other kinds of stocks. And if that's the case, the earlier you are to acting on that, the better off you're going to be. Now, are small cap and mid cap stocks rallying now? Is like just some short term blip? No, these stocks, especially small cap stocks, have been in consolidation mode, meaning they've been down and underperforming large cap stocks for years. And they're finally outperforming. I don't think this is a blip. I think this is a real uptrend in all the charts. And that's what I see. I look at the charts too, and I see these, I see these uptrends, and I think that these have a lot of power behind them. And now that you're seeing these stocks come down, a lot of investors who don't even know what NVIDIA does, oh, it's an artificial intelligence company. They're the leader in artificial intelligence. Well, what do? They're the leader in artificial intelligence. Okay, a-hole, what do they do? Oh, they're just an artificial intelligence company. They're the leader. They're the best. They're the biggest. They're making artificial intelligence possible. What do they make? They make artificial intelligence. Okay. When people start doing that, I'm like, you have no idea why you bought the stock. It's a semiconductor chip company is what they are. They have some, a lot of software too, but basically they make, super high powered semiconductor chips that can do like a gazillion, just a ton of instantaneous transactions to help create, to help run applications for generative AI. They don't make artificial intelligence though. It's basically a hardware play. And if you don't know that, and you don't know the name of the chip, their main chip is called the Blackwell, you probably don't really belong in the stock, but you bought it just because it's going, not you specifically, my viewer, I'm just saying people in general, they bought it because it's going up. And now they're like, what the heck did I buy this for? And I got sucked into the hype again. And I think until you get those kinds of investors out of it, who were the ones who got into it, I think it's going to be a long slog until that changes. And it could change, that's my opinion now. I could change it, but that's what I see happening. So anyway, to sum it up, I see the continued rotation into others. That's why you're seeing the Dow go up, the Russell 2000. The Russell 2000 is the key benchmark for small cap stocks. And that's why you see the S&P and the NASDAQ go down, because they're both so heavily slanted toward large cap technology stocks. That's it, folks, for the day. I hope you guys are finding this interesting and learning from it. If you have any questions, ask me in the comments. Give us a thumbs up. I always appreciate that. And I will see those questions. If you want a one-on-one phone call or visit with me or a Zoom call, whatever, to talk about your financial situation, your financial planning, your wealth management, your asset management, all that, give us a call. It's what we do. Until then, have a great rest of your evening.